For this. And so again, appreciate everyone for getting on this morning. Again, this is the San Diego and Imperial Small Business Development Center Connecting with Capital series. And so we appreciate everyone getting on. We know that we're here in 2021, but of course we're now in month 10 of all of this, and there's a lot of different needs and different things out there for everybody and what they have. So the Small Business Development Center, we're funded by the Small Business Administration as well as the state of California. And we provide a wide array of small business technical assistance, or basically business advising and business training. And so we have everything from kind of broad-based webinars like this with conversations with lenders or a whole bunch of other things, down to in the weeds and specific types of trainings and programs. And most importantly, what we do is we also provide one-on-one business assistance. So we help people be able to apply for the types of loans or assist or the capital assistance that each of these lenders have. We help people navigate and understand kind of the ever-changing regulatory markets, understand and adapting to e-commerce worlds, and many different types of things. So that's really what we're here for. So we appreciate all of you for getting on. We appreciate certainly our panel as well. And so we're going to go ahead and get in. And we'll go ahead and get started, and we can ask each person to kind of introduce themselves and just give a quick overview of what your organization does from kind of some lending and so forth. Why don't we start with you this morning, Fred?
Good morning. I'm Fred Crispen. I'm with United Midwest Savings Bank. I manage the small loan program for the bank on a nationwide basis. We're an Ohio-based bank, and I run the small loan program out of Panama City Beach, Florida, providing working capital for startup and existing businesses from $20,000 up to $150,000 under the Sba loan program. It's credit scored so that we can approve initial credit, usually the same day we get the loan out there.
Fantastic. And what about you, Rosalinda?
I'm trying to unmute myself. Good morning, everyone. My name is Rosalinda Delgado. I work for Accion. We are a nonprofit micro-lending organization. We are an alternative lender. We provide access to capital to those who lack access through the traditional institutions like regular banks. So we are an alternative lender. We lend up to $100,000. We start at about $300. We lend to startup businesses and growing businesses in San Diego, San Bernardino, Riverside, and Imperial counties. And we have been serving the San Diego area for over 25 years.
Fantastic. And what about you, Andrew?
Morning, everyone, and Happy New Year. My name is Andrew Krone. I'm Senior Vice President of Marble Bridge Funding Group. We are a 23-year-old commercial finance company, specialized in accounts receivable, purchase order finance. I do the underwriting. I've been here 20 years, and we work with startups and companies that are as large as 50 million in revenue, but most of the companies we see are doing $500,000 to 20 million a year, and we can provide up to 5 million a month in funding for companies.
Fantastic. What about you, Jenelle?
Hi, I'm Jenelle Chaloux. I'm a business relationship manager at Chase Bank. We're a traditional bank. Due to some of the COVID restrictions, we have stopped doing startups, but we do expansion. My sweet spot is anywhere from the minimum is 10,000. I can go up to 2 million. I do have partners that can go significantly higher, but we are a traditional lender, so we do require a FICO score 680, and we really like some sort of collateral to do a loan.
Fantastic. What about you, Pete?
Hey, my name is Pete Deegan. I'm with Lendspark. First of all, just want to apologize if the internet does come out. Having some issues here of late, like everybody. But we help small and medium-sized businesses get funding outside of their bank. We fund a lot of equipment. Now it's like dump trucks, medical equipment, and then just cash loans and lines of credit for businesses. And ultimately our goal is really to just get you back in good standing with your bank, or if you have some hiccups or need maybe some gaps filled with funding, Lendspark is really there to kind of help you and work and grow with you, and then get you back in good standing with someone like Jenelle at Chase or whomever. Sorry, internet just cut out.
Oh, you're still there.
Oh, here, yep. And we fund loans up to about 2 million, and we work with all types of different credit. So we can work with a little bit of credit challenges, or maybe some tax lien issues, maybe where your bank wouldn't let you do.
Fantastic. And Miriam.
Hi guys, I am not going to have a camera today because I'm also having technical issues. Got a new computer and volume cameras all over the place. But that being said, I am with SBC Small Business Finance. We have been around for 40 plus years and we are mission oriented. Our goal is to be able to provide lending when you're not quite yet bankable. So that be that you're a startup business, so you have a business plan and projections you've been working on with SBDC, or and you want to start your business, or you're maybe 6 months, a year, 2 years in. We do help a lot of clients for all types of use of proceeds that are startups, and then also, of course, existing business owners. And our loans are anywhere from $10,000 to $250,000. Our interest rates start at 5%. The highest interest rate we have is 9.25%, and our terms are for 10 years. So, we try to make it as favorable as possible to help people get to the point where they can work with someone like Jenelle at Chase. So we're here until you're bankable. That's what we do.
That's fantastic. So one of the things that we do with this particular, this makeup of this panel and most of our events is really help you as the small business owner understand that there's a wide array of different types of lending options out there for different types of situations. And I think that's what's so important, is that it's critical for you to understand that there's a lot of different types of good quality lenders and that meet your needs kind of where you are, and understand that there's different types of organizations and they serve different missions. And so that's, some of the stuff that you're starting to see here. And so as we go around for the next kind of questions, kind of understanding a little bit more of that, for in detail from you all, in terms of the types of loans that you provide and the types of clients you work with, kind of some of your wheelhouse and so forth. And also, do you provide kind of either the SBA guarantee or the California loan guarantee types of program? And why don't we go ahead and this time we'll start with you, Jenelle.
Hi. Yes, we are a traditional lender. We provide all types of loans, lines of credit, credit cards, equipment loans, residential, and commercial lending. As I said, we go to 1 to 20 million. We do ask for 2 years of tax returns in order to verify income. So, obviously, one of the other panelists would be a better fit for you for a startup, but we are very FICO driven as well. We are a relationship bank, so we look into the entire relationship that you have with Chase as well. So we take everything into account and looking at what we feel you can qualify for. And we will work with you. So if we're not able to do a loan, I will refer it to one of the partners on the panel as well. I want to make sure that you get the loan. If I'm not able to do it, I try to find somebody that can do it for you.
Fantastic. And are you an SBA lender and provide those guarantees?
Yes, we are an SBA lender and we do provide SBA guarantees, definitely.
Fantastic. Andrew, what about you? What types of loans and clients are kind of your wheelhouse?
So we specialize in accounts receivable finance and purchase order finance. So we work with companies that provide a product or a service to another company or a government entity, and they have to invoice that client. And instead of waiting 30, 60, 90 days to get paid, which stunts growth, and you may have to pass on contracts, we're able to fund those invoices within 24 to 48 hours. We can get you up to 5 million a month, so you never have to worry about not having enough money, and you can double or triple your business using our model. And so examples of clients I'm working with Svdc right now, including nursing registries, software companies. We just got one going forward tomorrow, which will be a construction company that's going to grow quite rapidly. So a lot of different companies will seek us out. We don't offer SBA or NorCal or different types of those programs, but the partners in those places do work with us. Depending on the deal, we do get agreements in place where you can not only have their money, so potentially you can get some money from the CDC from Miriam or from Rosalinda, and then we can also be a partner to go beyond that up to millions more in funding. So that's how we work with our partners that are on the screen. I'd recommend you talk to them. They have great programs, and we'd be glad to be part of that. So instead of having one lender on the screen, you could possibly have multiple lenders.
Fantastic. What about you, Miriam?
So we do have SBA loans. Our SBA loan product is from 20 to 250,000. That's our max. And we also have some other state funded loan programs and CFI loans. So, you know, some other products that we offer for people that are suffering currently through COVID. Those are 5% loans for 5 years, no prepayment penalty, great loans. And then we also offer, you know, we're offering the PPP loan for our customers. And then we are also working with Lendspark for the California grant program as well. So we are pretty involved in almost every area to try to help all sorts of small business owners, whether you're in the startup phase or you're an existing business. We are, you know, looking to help you. And I definitely echo what I heard as far as in us all working together. Everybody here on the panel, we refer to one another. So yeah, that's what we're doing here at CDC.
Fantastic. What about you, Pete?
Yeah, at Lendspark, we have two main types of loans. First of which is an equipment loan, which is really like basically think about it as a car loan for your business. We're going to pay the Bobcat dealership or maybe the food truck manufacturer. You got a 5-year loan, you know, it's paid and you own the equipment. Something that we've done pretty recently that might be odd, you might not think of. I probably do about 5 to 6, 7 coffee machines, are about $15,000, $16,000. They go in gas stations. So we're very equipment agnostic. It doesn't just mean bulldozers and dump trucks. So that's kind of something cool that we've been doing a lot of recently. Just kind of a sign of the times. You know, these gas stations are really, you know, become centers of their town for a lot of different needs, maybe that weren't before. And then we also have working capital that can be secured by real estate. We're pretty creative. We can secure it with maybe some equipment you have. So if you're a trucking company, a construction company, and you own some trucks, trailers, you know, bulldozer outright, we'll throw a lien on that and get you some capital. And then probably what's the easiest, most popular product is just unsecured working capital. This is just solely based on business revenue, basically saying, hey, I'm bringing in, you know, 40, 50,000 a month. I need to borrow 20, 30,000 for a very short time while my bank works out a loan, while this and this happens, you know, insert here. So those are the two types that we have. The working capital product, typically we like to have 1 year in business, about a 550 FICO. We're a little bit more loose with that. The equipment's more credit-based, about 2 years in business, and we want to see maybe more somewhere around the 625 personal credit-wise. It is a business loan, both of them though. As far as SBA, we're not SBA backed. We are an alternative lender, but we are processing PPP. What's nice about that is that I know obviously a lot of banks are serving their own customers, but maybe if you can't get a hold or something else is happening, we can maybe be of use. Definitely ask Lynn about that if you want to reach out, and she'll get it over to us.
Fantastic. And Rosalinda.
So at Accion, we provide several types of loans. Right now, we have 2 loans that are for COVID relief. And of course, a regular program where we have a rapid loan up to 8,000 and the regular loan up to 100,000. We have a lot of applicants for COVID relief loans. The COVID relief, we are participating in the California Rebuilding Fund, which is a loan with a maximum, you can access through Accion a maximum of 50,000, even though with other participating lenders, you might be able to access, I believe, up to 100,000. So with Accion, it's up to 50,000 to be eligible for that program. The business have to have had revenue of 250,000 max in 2019. We also have another program that it was, we were able to offer. This program is the California Rebuilding Fund program is a 4.25 max interest rate for a maximum of 60 months. The minimum FICO score is 500, and the client or the applicant definitely have to show the capacity to pay now. This program is 12 months interest only, and is amortized to a maximum of 60 months. We have another program that is 2.99. This program is exclusively for racially and ethnically diverse entrepreneurs. It's funded by Wells Fargo, and this program is up to $35,000. Minimum FICO is 500 as well, and gross revenues have to be less than 250,000 a year as well. Both of the programs are for COVID relief and based on 2019 sales. Now the 2.99 program, we use global cash flow, while the California Rebuilding Fund is basically based on 3 months of consecutive payments or consecutive 3 consecutive months of income. So we can pick the best months that you had in 2019, or we can take an average for the whole year and then multiply by 3. So you're eligible for 3 months of revenue from 2019. The maximum term for the 2.99 will be 48 months. However, there is no payments for 6 months on the 2.99 program. So a regular program, of course, goes to a maximum of 100,000. None of these programs have prepayment penalties, and all of these programs are guaranteed by the state of California guarantee program. We don't use SBA guarantees, we use a state guarantee program. Now for a regular loan, our loans start as I said, at $300, up to a maximum of 100,000. Anything above 50,000 requires 30% collateral coverage. For collateral, what we're using is vehicles that are paid off, trucks, boats, airplanes, anything that has a DMV tag that is paid off. If you're buying a vehicle, of course, we're going to take that vehicle as collateral. Now, anything below 50,000, we do not require collateral, but we will ask anyway to provide strength to that deal if needed. If you are a startup business, we're going to require a business plan with projections, and the business have to make sense, especially during these times of COVID. But we are doing startup loans as well.
Fantastic. And then lastly to you, Fred.
Like I said before, we provide working capital for both startup and existing businesses under the SBA 7A loan program. It's credit scored so that we can approve initial credit the same day we get the loan app in. These are all 10-year fully amortizing loans. Loans from 20,000 up to 50,000 are at prime plus 3 1/4, which would be 6.5% today, adjusting quarterly. Loans from 51,000 to 150,000 are at prime plus 2 3/4, which would be 6% today. They're all 10-year with no prepayment penalties. We took collateral out of the equation when we built this program many years ago now, back in 2003, I think, under the old Community Express program. But we determined that small businesses, especially service-based businesses, had the ability to generate cash flow that's sufficient to pay us back, but they didn't have collateral. And so we said, well, as long as that cash flow is there, we can make that working capital loan to that business and just take a lien on the business assets, whatever they may be. And so we've made it as simple as we possibly can.
Fantastic. And I got a follow-up question, but it's just for you, Fred, because I know you can explain this well, because I asked in this question about kind of the SBA guarantee. Can you explain what that is to a small business owner?
Yeah, SBA basically almost becomes your co-signer, if you will. SBA does not make loans directly to lenders or directly to borrowers, rather. They guarantee a percentage of the loan for the lender, for the bank. And in the small loan category that I participate in, it's an 85% guarantee. Under the larger loans, anything over 150 up to a maximum of 5 million, it's a 75% guarantee under normal times. Now, with some new legislation that's out now, all of the 7(a) loans will be obtaining a 90% guarantee for the balance of this year through September 30th.
And what's the benefit of that to the borrower?
To the borrower, it enables the bank to make a loan that typically they would not make on a conventional basis because there wasn't sufficient collateral or sufficient cash flow maybe initially, especially on a startup. A lot of banks do not like to make loans to pure startup businesses, which is something that we thrive in. Probably 90% of the loans I fund every month are pure startups, meaning the day that we fund that loan is the day they open their doors to start selling widgets or providing services or whatever they may do.
Fantastic. I picked on Fred for that because he's been an SBA banker for a long time, and I know he could explain it really, really well. So I wanted to make sure we kind of got that explained. And the California loan guarantee works basically the same way, except of course it's the state of California. And I know Accion does a ton of that type of loan guarantee programs. Many of their loans are guaranteed in those situations. So I wanted to kind of point that out a little bit. So some of you all did talk a bit about some of the COVID relief. So I'm going to, come back to that here in a second. But I kind of want to take a little bit step back in terms of things in addition to the COVID relief, as we're kind of in 2021. Some of you adjusted some of your things, but how is it that you're seeing things from a lending perspective for this year, and what's going to kind of change some of what are some of the environments that are going to continue to change, or hopefully go back to normal? I know that's kind of a big broad question, but I know it's stuff that we've talked a little bit about in the past, but I think it's good to kind of see now that we've turned the calendar. And why don't we start with you, Pete, on that one?
Yeah, what's really changed from a lending and underwriting perspective is that, I guess in the past we'd say, oh, let's look at some 2019, 2018 tax returns, and let's see how the business is doing compared to that. Are you trending upwards? But now your 2019 or even your 2020 tax return doesn't tell me anything about your business. That's like a whole different world that you used to be in. So it's almost like starting over from scratch. Us being alternative lenders too, we naturally know there's going to be, if you would, some hair on the deal. Whether that be credit challenges, maybe some cash flow issues of sorts, or tax lien, whatever. But it's really about getting a story and really, talking to these people a lot more. Not that we didn't before, but I think before it was easy to say, hey, look, these guys were, doing $1 million in 2018, they're $2 million in 2019, they're $3 million this year. Let's give them a loan for $200,000. Seems fine. That same company now might look a lot different, and maybe had a month where they only pulled in $40,000, and then the next month bounced back. But we have to say what happened here and why did this happen? Oh, this account didn't pay. Well, how did the receivables look now? And do we have contracts on hand that we can get? Can I get this in front of an underwriter? It's a lot more of a Frankenstein monster of an approval, if you would, just piecing things like this here and there. But yeah, I think that's definitely changed a little bit, but we're still able to really provide help for a lot of businesses. I think nothing's changed as far as volume wise. We're still lending just about the same amount almost as the year prior, just might be a little bit down, but we're just doing it in a different way.
Fantastic. What about you, Miriam?
Yeah, I would say a little bit about what he was sharing about where, last year we really looked at, 2019 to qualify our small business borrowers. But this time around, Yes, we're going to look at history from 2020, but of course, there's a lot that happened. So, something that I love about CDC is we don't have a ton of guidelines. We have two simple guidelines. What's your credit score? Because we want to know, that tells us about your character. So we want to know if we can trust you. So what's your history in making payments? And then cash flow, right? Cash flow is king. We want to make sure you can repay the loan request that you're making. And so that being said, we're a make sense lender. So for us, it's not about, a ton of guidelines and other than those two things, we really just want to see, like, does it make sense? So it's going to be very much a case by case scenario. It's not that we're not lending to restaurants. It's not that we're not lending to construction, but everything is about, okay, what's in the pipeline? What are your projections? What contracts do you have? If you were a restaurant, what did it look like during, delivery? And so, yeah, there's just going to be a more, does it make sense to lend to you type of scenario with probably more projections based than in the past. That's what I'm seeing a difference in. But credit is still king and cash flow is still king, which always has been for lenders. So yeah, we're still looking at those things. We're just having an open mind. We're here to make loans. We're here to help small business owners, and we're just kind of doing a lot of the same thing that we're doing before. I am seeing in some areas that we are being less stringent. For example, a credit score requirement used to be a strong 680, and now we have some programs that you could do for 640. You could be maybe 5-10 points off. So yeah, those things are positive. I am seeing that restaurants, we actually are no longer doing startup restaurants. We are doing restaurants that can cash flow, but not startup restaurants. So some things are changing, and I anticipate some things will get positive and some things will not look positive for some industries until, of course, we see a little bit of the new norm until things continue to change.
Fantastic.
So that's
what about you, Andrew?
Okay, so from a Marble Bridge perspective, our underwriting hasn't changed at all. We've been around 23 years. We've gone through all these ups and downs, and through each of those changes, we've been able to fund straight through with no issues, no hiccups. So from our end, everything is good. I think it's important for everyone to know that because 2020 was such a difficult year for a lot of small businesses, that Miriam and Rosalinda, those types of programs are going to be very helpful for you if you can qualify for them, to get the small little loans to fill in some of the gaps you need. A lot of the small businesses in 2020 and going now into this year have made changes. They've cut overhead. They've gone after different types of markets. We're seeing a lot of creativity, which is what the American dream is all about, and being an entrepreneurial. So we are seeing a huge increase, which is what I expected, of people who are applying for us to get funding. There's all sorts of young businesses that are coming our way, and we don't have a credit scored product. We probably have the easiest box, or I would say the easiest loan process to get through. What we're looking at is your story, and are you growing? And you've got to be growing. And what are your plans to get growth? So we buy into your presentations. If you had tax liens, past judgments, you had a bankruptcy, we can get through all of that. We're more concerned about what your business plan is and where you're growing. So some of the other lenders here can give you some of that initial working capital support, and we could play the bigger role of giving you the funds and the fast growth, and you can go after the contracts. I think on the really large picture, at least from what we can see, and we work with a couple thousand bankers in our market area, that credit remains very tight with traditional bankers. Some of the smaller community bankers, and I think Fred is one of them that fits that role, are able to do some things that a lot of the other banks aren't doing right now. So they've really tightened up. They've decided which industries they're going to fund, which industries they're not going to fund. And the savior to all this is SBA, Svdc, the federal government, and the state of California. They are coming in at the backstop. I mean, it's amazing for the government to give a 90% guarantee to an SBA loan. They're taking all the risk out of it. So the government this year, next year and probably the year after, and I don't know when it will stop, is really going to be the major player to help you get those extra funds you need. And when you get those funds, and there's all sorts of things you have to go through at each bank in each situation, if you're a receivable base, we are still there for you with those SBA guarantees or state guarantees and the micro lenders here, where we can come in and offer you additional working capital. So something to think about in your business plan if you're saying, God, I can't go after that business because if I do, I don't have enough money. If that's the case, we should talk.
Fantastic. What about you, Jenelle?
Yeah, I agree with everything that's been said previously. Coming from a traditional bank, we are very optimistic going forward. Obviously, with COVID, we did constrict. We started looking at loans. We stopped lending for a little bit, tried to analyze everything that was going on. Now we're back to pretty much normal lending. We are taking advantage of the SB guarantees for our clients that have a riskier like credit score, like a lower credit score or no collateral. But we are back to lending. What we're looking at is again, a story. We have a COVID questionnaire. We want to find out what you're doing, prior to COVID, what happened to you during COVID, and what your plan is moving forward. We are actually doing restaurant loans. I have a construction loan for a restaurant that's being built right now. So, it's almost unheard of during this time, but we are doing it. The restaurant owner was able to, the word we use is pivot. He was able to take advantage of takeout orders. He was able to implement some changes. He went from a cash basis to accepting debit and credit cards. So he's actually been able to grow his business. The same thing with gyms. We've seen some gym owners that have taken, some really good steps, doing subscriptions on the internet, outdoor equipment, things like that. So we're looking at what steps you're taking going forward on the business. We are going to look for a snapshot of tax returns before COVID. So we'll be looking at that. We would be looking at a P&L during COVID. And if there was any shutdowns, with like a really strong explanation. Obviously, if it's mandated, there's nothing you can do about that. But we are looking again at the whole package and seeing if there's a story there, if it does make sense. Right now, we are in the middle of PPP lending, and we did the same thing on previous rounds. What we're doing is we're concentrating slowly on PPP loans the first couple of weeks to make sure that we're getting those hard hit businesses taken care of. So we've put lending on pause, any new loans, until we're able to get the bulk of PPP lending up and going to those clients that really need it. But we are still open for business. We're still lending as long as you do have, strong credit. You do have a good story, good plan in place, a good business plan. We can lend to you.
Fantastic. And what about you, Fred? I know yours, you've talked a bit about this, and yours is pretty specific, but kind of, certainly with startups and industry types, I know there's some changes you're looking at.
Yeah, we backed off of restaurants and fitness facilities for right now, entertainment facilities where you've got to put a lot of people together in a limited amount of space. But that's a temporary, just until we get through this COVID pandemic mess. Hopefully we'll crank that back as we get the country vaccinated. Hopefully this will change around, surely to God, by the middle of the summer. And get back to normal operations. But outside of that, we're, like everybody else, we do have a COVID questionnaire. We want to know, as probably 90% of my loans, as I said, are pure startups. We want to know how you're going to cope with the COVID environment in your business operations. What effect that going to have on your ability to generate cash flow? That's the most important part of it.
Fantastic. And then I'm actually going to bring you the simple question here William put in here about how in the chat box about a business loan. And it kind of does tie a little bit in terms of a personal guarantee, but do loans ever get put in a business's name, or is it always in a person's name? That's to you, Fred. Yeah.
Oh, to me?
You're kind of my extra expert here.
all, all of the loans are always to the business, but the borrower has to personally guarantee it. That's an SBA requirement. And that's pretty much the case even on a conventional basis anymore in today's world. The day of non-recourse financing, unless you're a mega corporation, has pretty much gone to the wayside. You're going to have to personally guarantee anything. But SBA loans are to businesses, so we make the loan to the business with a personal guarantee.
Right.
And you know,
oh, go ahead,
I was going to say on the bank end, you know, I agree. It is in the business name and it is a personal guarantee. You know, for us, it's like, you know, if you don't want to personally guarantee your business, we question. So you don't have skin in the game, basically. If you're not going to support your business, then why should we lend to you if you don't feel strongly enough that you can give that personal guarantee?
Right. And I know that's most of you all here, that you look for that type of personal guarantee because it's that extra support and so forth, along with some of the collateral and so along that.
I guess if you are a very established company, kind of building on what Fred said, for us, we could do it with the equipment product if you have about 10 years in business, and more importantly, what we call comp debt, comparable debt history. So your business has financed and paid off very similar cost equipment before. So in certain cases, for more established, we can do non-PG loans, corp only.
Fantastic. So, you know, we've kind of seen some of the stuff that's going on with kind of the move on. And I know, Rosalinda, you talked about that already with some of the things that are going on with Accion. But I can't think, as you know, as we kind of look forward here, what are some of the things that, you know, small businesses can do now and as they're kind of moving forward, you know, to adapt to some of these changes? And as Fred talked about, hopefully things start to get back to a degree of normal, whatever that looks like. How about just open? we'll just go with that, you know, and what they can start doing and what are some of those tips you can give them?
We are forecasting that by mid-year, we're going to see some sort of normalcy after we achieve herd immunity with the vaccine. So that's what we are forecasting as an organization. We will continue to do COVID until mid-year. Now, in terms of preparation, we continue to do a regular loan. We haven't stopped doing a regular loan. Of course, everything that was mentioned before applies. You know, character is going to be very important. We're going to ask a lot of questions. They're going to come from our business development to see how prepared you are, how have you pivot if you have an existing business, what have you done to be able to stay in business? That is a question that is going to be very important. Now, we funded a startup restaurant recently, and they are doing amazing. You know, the owner was the restaurant owner. He had a regular normal restaurant that he had to the restaurant became pretty much a delivery or pickup restaurant, right? They couldn't serve inside. So he created another restaurant that is more informal. So people to come and grab the food and go. And it's pretty much fried chicken and waffles. And he's making a ton of money with that little restaurant. So people need to eat, right? So in terms of people that are wanting to start a restaurant or wanting to grow the restaurant or that are growing the restaurant and need additional capital, we're going to be, my advice is that they are prepared. They're prepared. They need to look at their credit because, of course, we require personal guarantees. They need to look at their credit. They need to pay attention to their bank accounts. You know, they want to make sure they're current on their credit, or at least they are. And we're not going to expect perfect credit considering COVID, right? That everybody has gone through difficult times. But we want to see an effort on your side as business owner. You can make an effort to stay current or take every action. Now, there is some things that we don't have to consider that closely, like student loans. We know they might be in deferment, which that's totally fine. But we're going to be asking more questions than usual due to the circumstances where we are. So preparation is going to be key. Your business plans and projections are going to be key. And pay also attention to your bank statement to make sure, you know, you keep track of everything, that you don't have any theft or overdraft. That also can affect you. So make sure you're managing your finances adequately, and which is very difficult to do during these times. But for a regular loan, we're going to look at that.
Awesome. What about you, Andrew? What are, as, businesses are kind of moving towards, hopefully, we'll just call it open, I guess. And, for that, what are some of the tips you would give them in terms of things that they need to be?
Well, it depends on the business and what's going on. So if we look at what's going to happen this year with a couple of trillion coming from the federal government, I think for all of us, we're going to see a huge bump in economic activity as they push the money out. They're talking about sending the money via the IRS directly into people's bank accounts now, not even doing checks. There's all sorts of new things that are going to be happening electronically, and changes in the money supply to try to get the speed up and generate jobs and work and stuff like that. So we are going to see some upswing, even though we got, COVID right now raging out there. The other side that hasn't even dropped yet, the federal government's also going to be pushing infrastructure. So for the businesses that are in infrastructure, construction related, this year and next year could be one of the biggest booms they've seen in probably 10 years. And so a lot of the companies I'm dealing with are, again, getting ready for that. They're getting their accounting more sophisticated. They're bringing in smarter people to help them, counsel them to get in position for things like that, learning how to do the bidding process better. So, we know that's coming, and we've talked to a lot of the clients, since we do a lot of construction funding, that's going to be a big play out there. From our end in my businesses, we're not asking them to give us a COVID report. We know the industries. We're not funding service space as far as like restaurants, but like nursing registries, they can't get enough nurses. So the demand is outstripping all the supply. We have a lot of veterans we work with, and they're getting a lot of jobs, and they're going to get a lot more. So, I would say this to the people that are here, you have the Svdc, you need to talk to them. And they know where the jobs are. They know what you need to do to get your business, just by working with you a little bit. They know what needs to be done to get your business to a different level. The biggest thing I think businesses can do, and the biggest weakness I see, and I'm going to bring this up later, Daniel, one of your questions, is the financials are still not up to speed in any way, shape, or form. We can fund all those financials, and 80% of them I see are wrong. And I pointed out to them, and I say, it's great that we're working with you. It's great we can fund you $500,000, $1 million a month. But if you're going to get to a bank, you're going to get to Chase. They're not going to accept those numbers. And you really have to get those together. So at our end with our businesses, we're constantly counseling them to get smarter and sharper. So eventually, when they get to the level of growth that they don't need us anymore, they can seek out the real traditional banks like Chase and move into a whole different category of lending. But it's an opportunity right now to do that. And I think when you get into these economic slumps, and I've been doing this 20 years, businesses always had a plan for growth. They didn't have a plan for contraction. And then they're always like, what do I do now? They really need to always have both. And I think the economy over the next year is not going to be one smooth increase. We're going to have speed bumps along the way. There's a lot of repercussions that haven't even happened yet that are coming. And you can hear that from the new administration. Their economic guy is stating that there's a lot of worry within the administration of what is coming down the pike. And so I think the government, and it's going to be your friend, the SBDCs are going to be more important than ever, I think, in the history of the organization, to really help you navigate your business, and you really need to work with them. And then the lenders here, especially the alternative lenders, are all the easiest places to get money for right now. So if you had the hiccups, with COVID in 2020, at least at our end, there'll be no effect. We're looking at what you've done to change where the future is headed. And that's why we're able to be such an important partner in this type of an environment.
Fantastic. Thanks, Andrew. A lot of things there. And that's really what we're here for at SBDC, is to kind of, be that again, that business guide, that business mentor, that advisor. And again, we're trying to talk to and understand a lot of different industries. Here in San Diego and Imperial, we have over 100 plus different types of experts in different fields. And so appreciate the shout out, Andrew, and all of that. So Pete, what about you? What are some of the things that from an industry perspective, you talked about some of adapting and people just buying coffee machines, and that's important.
I would suggest that people use their financing wisely. What I mean by that is, most simply, talk to your SBDC. They're going to be the professional. But what I mean by using your financing wisely is that there's a lot of money coming around everywhere, all different programs, very cheap. But if you don't allocate it the right way, or for instance, if you're going to buy a truck, $50,000, whatever, trailer, I just got $300,000 for PPP. Well, I'm going to just buy this cash. Well, sir, why wouldn't you pay a 5 or 6% rate, $1,000 a month or whatever? Oh, well, this is free money. Why not? Well, that's going to come to bite you in the butt later. Whereas if you just, 5%, 6%, even if it was 10%, it doesn't matter, because it's a 5-year loan that is an equipment that pays for itself, that you deduct tax-wise. Like, a rate is not this end-all be-all figure. I have people that say, oh, no, thank you on your equipment loan. That's a 5-year monthly payment. That's way lower than my line of credit payment's going to be, that I have to clear down every year. But my line's at 3% and you're at 8%, so I can't do that. And it doesn't make sense to me. And it's, talk to your SBDC professional. They will put it out on paper for you. Sir, this is your cash flow. This is what happens even if the rate is 10% and we pay an extra $200 a month, we're going to save so much headache by having a $2,000 payment versus, oh, it's a year down the line, your line of credit's called, or PPP, the government's saying, well, you didn't spend this $50,000 on payroll, you spent it on a truck, that's not qualified, you owe us that money back right away. And yeah, just talk to your finance professionals. And there's a lot of cheap money out there, but make sure you use it wisely and allocate it properly. And SBDC can help with that.
Fantastic. Thanks, Pete. What about you, Jenelle, from a traditional bank perspective, kind of what you're looking at as you go forward?
A lot of the similar things that the previous panelist said. The one thing that I would stress is, when you come to a traditional bank, you do need to have your financials in order. So we are going to be looking at that. You need to have a clear idea of what you need, how much you need, and what you need it for. You need to be completely honest. We're going to find out. We're going to do credit checks. We're going to, go back into everything we can to find out that, that the risk is substantiated. So be upfront and be honest. If there was a bankruptcy 10 years ago, let me know, so that way I can mitigate it. So I can, go forward, talk to the underwriter, have an explanation. But yes, be smart on your financing too. The other thing is, try and keep your cash. A lot of people, what they do is they blow through their cash before they come to the bank. By the time you've exhausted all your reserve funds, we're going to be looking at that too. We're going to be looking to see how much cash you have on hand. So it is better to get a loan up front and save your cash, as opposed to use your cash and then come to the bank and request a loan. So like I said, there's a lot of different ideas and perspectives that have been put forward, and it applies to all of us. Those are the main things we're looking for. We're looking to see, what's your story, what's your business plan, what's your character, how you've paid your bills in the past, what you're looking forward to in the future. So really spend some time with, your bank or whoever it is, and make sure that we understand your story from the past, present, and future, so that we can explain that to the underwriter, increase your odds of getting the amounts and the approval that you need.
Fantastic. And what about you, Miriam?
Yeah, I think that this question really goes back to what I was talking about before, about how we do our underwriting, what we think about before we approve somebody. So, we're really going to be looking at, does it make sense? How many revenues of income do you have? What comes to mind is actually an example of a client that I sent into credit this week. And they're a team, so it's partnership, 50-50%. And they each had their own separate sole proprietor businesses. And one of the gals was an event planner, and she did pretty well, and the other gal had, I can't remember off the top of my head, but it was another type of job that's not doing so great right now. Yet they have managed, because they've been in the industry for a long time, to still have some cash flow that's not necessarily negative. And now they're coming together and they're doing an e-commerce business. And so for us, yes, they have the experience. It makes sense. They've run successful businesses in the past. It's not that they're letting go of their old businesses. They have, thought of different ways to do event planning online and just different scenarios. And so, we're going to continue to kind of do what we've always done for 40 plus years. In the way that we, underwrite, it needs to make sense. Of course, as Jenelle mentioned, credit and how honest the client is ultimately very important. We want to look at, your history and make sure that, not that you won't have any dings, we're okay with, did you have a collections item? Did you have a BK? As long as you're current and you have payment plans and everything in place. But we're going to continue to do what we've been doing. Traditionally, our lending has a very low default rate. So, that hasn't changed this year through COVID. Of course, we've worked with a lot of people, but, we hope to continue to fulfill our mission of providing financing for small business owners that have, different barriers for, whether that be they're in a low income area, whether they're African American or Hispanic, or they're just, any color, but not bankable yet. So we're just going to continue to see, what are you doing to provide, different streams of income, or, what does your current, if you're keeping your sole proprietorship or your corporation, what are you doing outside of the box? What has changed in your business since COVID happened, that will keep you viable and keep your cash flow going, right? And so, that I would say that kind of well describes what we've been doing and what we'll continue doing.
Awesome. So we'll end with you, Fred, since I picked on you a couple extra times. And so again, we appreciate everybody getting on, and we'll let Fred bring us home in terms of kind of some of that question. Again, at the SBDC, we're here to help you. You can reach out to us. We have many of these different types of programs and panels. We're helping people in depth with PPP and everything. And, we really appreciate all the hard work that all our lenders are doing as well. We really are committed for the small businesses to get through this. So we'll end with you, Fred, on kind of what your forecast is with your crystal ball.
Yeah, I wish I had one. We look for it to be a strong year. I mean, we ended up last year as the 8th largest SBA lender in the country as far as number of loans, and that's continuing. I think through December we were like the 7th largest. So, but that's due to the fact that we're doing pure startups. I think the recent COVID legislation that will make borrowers' first 6 payments for them beginning February the 1st is going to be a tremendous boost to small businesses that are trying to start. And so I'm looking for our pipeline to continue to grow, much like it has over the past year. We're optimistic about the future. I think the vaccine will help hopefully get us back to a near normal at some time this year. And so that's what we're kind of banking on.
Fantastic. So again, we appreciate everybody for getting on and giving their updates. We know it's been crazy times. 2020 was a year none of us will ever forget, certainly. And so we appreciate, all the panelists, from all of their lenders. We thank our sponsors of this programs, which include Marble Bridge Funding, Primary Funding, Lendspark, Home Street Bank, CDC Small Business Finance, and we appreciate all the panelists for getting on here and spending an hour of their time to talk to small businesses. And I think what that shows you is that the lenders there's a wide array of different types of lenders out there and are committed to small businesses. They're the small business success and are really an asset to you out there, for you to be able to first survive through all of this and then really to be able to succeed in your small business dream. So Thanks, everybody, and have a great weekend. And we appreciate all of you. Take care.
Take care. Thank you.
Everyone.